Welcome to this video today, which is on 22nd of January. Last week I was asking anyone who was watching the forecast that I did, are there any topics you uncovered in a video? And yeah, one that I was asked quite a bit about is the correlation of Forex pairs, and in relation to correlations, how they correlate with risk on and risk off and why they do so. Now, it's quite a topical subject at the moment because a lot of people are worried about a move from risk on to risk off, possible big correction in equities, which currencies perform the best, which perform the worst, and why. So we're going to look at that in a moment. Also, I frequently get asked, do I think the US dollar is going to collapse? You see a lot of doom and gloom about that online. The answer is no, and the reason is because of the way it acts in terms of its reserve status within the global financial system, which we will also look at. So what we're going to do now is look at some currencies, their personalities, and how they're likely to fare in both a risk-on environment and, of course, if we move to risk-off. So I'm just going to list out the pairs now and we'll just go through them. Right, let's look at Forex correlation in terms of positive and negative correlation with risk. Now, what I'm going to do is just go through the currencies with positive correlation with risk off, those with risk on, how to trade the two groups, and also within the two groups. Now, in terms of positive correlation with risk off, there's 4 currencies that, as a rule of thumb, will gain on all others if we see nervousness in the global financial markets, a big sell-off in, let's say, equities. Now, well, let's start with US dollar first of all. It's the world's reserve currency. I see a lot of people saying, it could collapse in the near future. It's not going to be a safe haven anymore. It's always going to be a safe haven because of its world's reserve currency status. Now, I'll come to that in a moment, but first of all, why does it gain in terms of a move from risk? Well, obviously, US has got the biggest, most liquid bond market in the world. Money flows from equities into bonds, okay? But the other reason why it gains is because being the world's reserve currency, a lot of banks, even if they're not in the US, will grant loans against a US dollar base into other countries and currencies. So basically the money will be taken from US dollars and then given into the other currency as a loan, okay? Those loans start to dry up when you get a move to risk off. Furthermore, loans that are in another currency in another country are very often called back by the bank that has granted them. So that currency has to be converted back to US dollars, you have to buy US dollars. That helps the dollar rise. And there are hundreds of trillions of dollars in loans like that around the world. So that is why the US dollar is unlikely to collapse. It's always going to be a safe haven. Okay, now moving to the safe havens, I've graded them 1 to 4. US dollar I put in second place. The number 1 safe haven is the JPY. A lot of people are puzzled why the JPY would be a safe haven. Well, it hasn't got a great economy. It's got negative interest rates, but it's got 2 things going for it which make it a safe haven and the world's number 1. First is it's got the second largest bond market in the world. So money flows into bonds, that helps it. But the major factor is Japanese are basically huge savers. They have massive holdings of risk assets around the world. When you get a move from risk, they sell them up and bring them back to Japan. Okay, there are 2 other safe havens, minor ones, but they're always worth keeping an eye on in my view. Swiss franc. Switzerland has always been a safe place to put your money in times of turmoil, so it's still a safe haven today. In recent years, the Singapore dollar has become, or Singapore has become the Switzerland of the East, politically stable and a safe place to put your money in times of turmoil. Now, they're minor safe havens, but I always think they're worth keeping an eye on. I'll come back to that in a moment. Now, in terms of currencies, they've got a positive correlation with risk on, i.e. they're probably going to rise as a rule of thumb over the risk off currencies. If you've got optimism about the global economy and equity prices are firm, I put your own GBP, but that isn't such a strong correlation as the commodity currencies, i.e. the AUD, CAD and NZD. Commodity currencies are much more sensitive to risk as a general rule. Why? If the global economy is doing well, commodity prices tend to be firm. Also, if you've got like strong stock markets, there's massive speculation in commodities. So, you know, all speculators are just buying commodities because it's optimism about the global economy. If the global economy slows, obviously commodities fall. If you get a sell-off in equities, that will always be accompanied by a sell-off in commodities as speculators run for cover. So AUD, CAD and NZD of the majors, the ones to watch against the risk-off currencies. I've also listed out the emerging currencies. Now, a lot of people don't bother looking at the emerging currencies because obviously you get slightly wider spreads in them, but that doesn't matter if you're a long-term trend follower. You can very often get great opportunities in these currencies. They are, as a group, the most vulnerable in terms of a move to risk off. Just list out a few of them. We're just going to go through them. Turkish lira, actually that's already moving lower. A lot of political problems in Turkey. It'll sell off more if we move to risk off. Mexican peso obviously has fallen recently on Trump's views about Mexico. Still has further to fall if we move to risk off. CNH, offshore Chinese yuan. This one is a good downtrend, but this downtrend will really accelerate if we have a move to risk off. China very vulnerable to capital outflows, so that looks a really good long-term trend to us. Russian ruble, world's biggest commodity producing nation, okay, but the ruble's been fairly firm. That's because interest rates are holding it up. That doesn't apply when you get to risk off, in my view. I think the Russian ruble very vulnerable to a sell-off. Similar argument applies to South African rand. It's been firm, but big move from risk. See the ZAR sell-off. Emerging market currencies in Europe to keep your eye on. Polish zloty, Hungarian florin, again vulnerable if we get a move from risk. So what you can do is you can just trade the risk-off currencies against the risk-on currencies. Our particular favourite obviously is the Japanese yen, obviously the US dollar as well. In terms of the Swiss franc and the Singapore dollar, I think they're worth trading against the commodity currencies in particular. Why? Because very often you get less speculative interest in these two minor safe havens, which means they're not as spiky as the JPY and the USD. So I always think, Swiss franc, Singapore dollar worth trading, and I think, on the AUD, CAD, and NZD, they're well worth a look. So you can just trade, risk-off currencies to risk-on, or you can trade within the groups. So, for example, in terms of safe havens, you take the strongest one, JPY, and buy it on the other three. And the USD would be a buy on the Swissy and the Singapore, for example. We do the same in the group with the positive correlation with risk on. For example, your own GBP, in my view, buy them over the commodity currencies. So, we haven't really seen a big move away from risk, but I think that is coming. I just think if you keep the currency in, personalities in mind and how they line up in the groups, you can take advantage of the correlations, in terms of if we get a move from risk on to risk off. So that's my little summary of the Forex correlation in terms of risk and safe haven currencies. I'll come back after that short overview there on how I see Forex correlations in relation to being in a risk-on environment, and of course if we move to a risk-off environment. Now, in terms of the way the correlations, I've given them, obviously any pair can be affected by other events which change that background, okay? But in general terms, if we did have a big move from risk-on to risk-off, I see the currencies broadly strengthening and weakening as we've looked at in the summary. Now, in terms of US dollar collapsing, due to the way it acts as a reserve currency in the world. I just see that as so unlikely. And yeah, I've been hearing about the dollar is going to collapse for over 30 years. It hasn't. Yeah, the amount of loans that are granted against a US dollar base means that in a move from risk, the US dollar is going to rise, in my view. I just see the dollar as remaining a safe haven, although many people might disagree with me. Now, in terms of just knowing those correlations, they can help you, find some great risk-reward entries on your charts, in my view. Correlations, they can obviously change, but those correlations I see being in place at the moment, I do think there is the potential for a move to risk off, and just knowing those correlations can get us some decent risk-reward opportunities. Now, in relation to any other subjects or topics people want covered in videos, please feel free to write to me, and I'll be happy to do a video on any Forex related subject. So that is the video for today. Thank you very much for watching me.